Hello and welcome back to the lesson. Today we are going to study the characteristics, the benefits, and the drawbacks of venture capital as a form of long-term financing, which is provided by professional investors to startups and high-growth companies with promising business ideas and potential for substantial returns. That is to say that venture capital is a form of long-term funds that is provided by investors we are calling professional investors, and that financing is provided to startups or high-growth companies with promising business ideas and potential for substantial returns. And the investors who advance these finances are known as venture capitalists. Now, venture capitalists typically invest in exchange for equity ownership in the company. That is to say, if you are a startup, you have a startup company, or you have a high growth, a company that promises high returns, then you can turn to venture capitalists to offer venture capital in exchange for equity ownership in that company. So today we are going to study the characteristics of venture capital. We also highlight the benefits of venture capital and the drawbacks of venture capital. Let's begin with the characteristics of venture capital. Characteristics of venture capital. Number one, equity investment. How is this a feature or a characteristic? Now, candidates, venture capital involves the exchange of equity. It involves the exchange of capital for equity ownership. So venture capitalists become shareholders and share in the company's success. So when the company is beginning, they offer the capital that is required. Then that capital that is in that venture capital is not for free. That venture capital is in exchange of the equity ownership in the company. They eventually become shareholders. Venture capitalists eventually do what? They become shareholders. And venture capitalists, I said before, that are investors who target startups, because most startups may not have capital to run their business. They also target organizations, startups that have high chances of promising substantial returns, companies that have potential for substantial returns. So the first feature is equity investment. Two, high growth focus. High growth focus. Venture capital shareholders, or let me say, venture capital is typically directed towards startups and early stage companies that have high growth potential. And venture capitalists seek companies with innovative ideas They seek companies with scalable business models and so on. High growth focus. This capital high growth focus. The third characteristic is in relation to involvement, active involvement. That means that venture capitalists are actively involved. They are actively engaged in the company's affairs. They take an active role in the company. They not only provide venture capital, but they may provide strategic advice, strategic guidance. They may advise, they may provide industry expertise. They can also provide networking that may be required for the new startups, networking opportunities. So, and such involvement goes beyond the traditional passive investment. So venture capitalists are actively involved in the affairs of the company, offering expertise, offering network opportunities, offering strategic guidance, and so on. Active involvement. The fourth feature of venture capital is long-term horizon. Long-term horizon. Venture capital has a long-term investment horizon, which can extend for several years. And investors aim for substantial returns from the company. You understand? Because substantial returns can only be actualized in the long term. So venture capital has long-term investment horizon. Do you understand? Long-term investment has a long-term horizon that extends several years, and investors aim for substantial returns when the company reaches what we call a successful exit, such as through an initial public offering or even acquisition. Long-term horizon, investment horizon. 5, risk and reward. How is risk and reward a characteristic? Now, venture capital involves a high level of risk due to the early stage nature of the company. However, the potential for significant returns, the likelihood of significant returns is also high in case the company succeeds. So there is an element of risk and return. The risk is high, the reward is also high. Risk and reward. So these are the features. How about pros? Advantages. What are the advantages of venture capital? The obvious advantages in relation to access to capital. Access to capital. Number one, access to capital. Access to capital. Startups and high growth companies which may face challenges in accessing traditional financing can secure substantial capital from venture capitalists to fund their development and expansion. Access to capital. Strategic guidance. Strategic guidance. This is made possible because of the active involvement of the venture capitalists. Venture capitalists often provide valuable strategic guidance and mentorship to portfolio companies, leveraging the industry experience and network to enhance the chances of success of the company. Strategic guidance. 3, expertise and resources. Expertise and resources. Now, beyond funding, venture capitalists bring expertise, bring resources to the table, thereby assisting companies in areas such as business development, marketing, scaling operations, and so on. 4, high growth potential. High growth potential. High growth potential. Now, venture capital is particularly suitable for companies with high growth potential and companies with high or companies with disruptive business models that may not fit in the criteria of traditional leaders. High growth potential. This capital is made available to companies with high growth potential, with companies that are deemed to be disruptive, companies with disruptive business models. Such companies may not get traditional funding from traditional sources. So that's an advantage of venture capital. It funds high growth companies with high growth potential. 5, alignment with interests. It aligns with the interests of the shareholders. The equity-based nature of venture capital aligns with the interests of investors, aligns with the interest of entrepreneurs, and both parties benefit from the company's success, creating a shared incentive for growth. These are 5 advantages of venture capital. We are going to outline the drawbacks of venture capital. One is equity dilution. Because remember, we say that the venture capitalists provide venture capital in exchange of equity ownership in the company. So accepting venture capital involves giving up a portion of ownership of the company. And such equity dilution can impact the founder's control and the decision-making power. 2, high expectation. High expectation. Venture capitalists expect high returns on their investments. And such pressure for a significant exit value can create challenges for companies that may prefer a slower, a more sustainable growth path. There is a high expectation for success from the venture capitalists. 3, limited exit options. Now, candidates, successful venture capital investments often require an exit strategy, such as an IPO, such as acquisition, and so on. So the timing and the availability of a suitable exit option can be uncertain, thereby impacting the realization of returns. Limited exit options. 4, risk of failure. Risk of failure. Venture capital investments carry a high risk of failure. Why? Because many startups that are funded by venture capitalists do not succeed. And investors may lose their entire investment in companies that do not perform well. 5, strategic differences. Strategic differences. Differences in strategic vision or expectations between the venture capitalists and the entrepreneurs can arise. These are differences between, on the one hand, the venture capitalists and on the other hand, the entrepreneur or the founder of the company. There could arise strategic differences. You understand? Which may lead to potential conflicts, and therefore balancing the interests and the goals of both parties is crucial for successful partnership. Because the strategic differences sometimes could be inevitable because they have different objectives. The capitalists, the venture capitalists may have goals, they may have expectations that differ from those of the founders. So these are characteristics, benefits, and drawbacks of venture capital. The first characteristic is equity investment. We saw that venture capitalists invest money in startups in exchange of equity ownership. 2, high growth focus. 3, venture capitalists are actively involved in the affairs of the company by offering strategic expertise, strategic guidance, network opportunities, and so on. 4, long-term horizon. 5, risk and return or risk and reward. Then the benefits: number 1, access to capital, strategic guidance, expertise and resources, high growth potential, alignment with interests. Then we have outlined 5 drawbacks of venture capital: equity dilution, high expectations, limited exit options, risk of failure, strategic differences. Now, in summary or in winding up, candidates, venture capital is a specialized form of, you can say, is a specialized form of long-term funding that suits high growth startups and companies with innovative business models. And while it provides access to significant capital and strategic support, the founders or the entrepreneurs must carefully weigh the potential benefits against the challenges, including equity dilution, the high expectations of the capitalists, and so on. So the decision to pursue venture capital should align with the company's growth objectives to avoid what we discuss here as strategic differences, and also to align with the willingness of the founders in order to navigate the unique dynamics of this funding source. Thank you for attending the lesson. Here is your today's assignment on venture capital. Number 1, what criteria do venture capitalists typically use to evaluate and select investment opportunities in startups? And how do these criteria align with the venture capital firm's overall investment strategy? 2, explain the role of venture capital beyond providing financial support, including the value-added services and mentorship often associated with venture capitalists. 3, how do the exit strategies employed by venture capitalists, such as initial public offerings or acquisitions impact both the venture capital firm and the startup seeking funding. Once again, thank you for attending the lesson. Bye-bye.